In case you missed it, the Federal Reserve made history recently. It wasn't shocking, jaw-dropping, or even very obvious, and it, ironically, triggered the stock market's 16th largest one-day gain ever, which made it hard to notice that the nation's central bank had just exhibited a uniquely American act of transparency on January 4th that is likely to be recalled in financial history. At 8:30 that morning, the Bureau of Labor Statistics in Washington released a stronger-than-expected jobs report. With 312,000 new jobs estimated to have been created in the economy in December, fears of a recession receded and stock prices rallied, but by 10:30 had given up much of their gains, when suddenly share prices surged again. Why? In Atlanta, at that very same moment, Jerome Powell, the chairman of the Federal Reserve, took the stage with his two predecessors, Janet Yellen and Ben Bernanke. But Mr. Powell was the center of attention. On December 19th, the Fed chair announced a quarter-point hike in interest rates, and a bear market in stocks immediately ensued. An economics writer at the New York Times introduced Mr. Powell and almost immediately asked the nation's most important financial officer if he had made a mistake by raising rates. Mr. Powell's answers were an extraordinary display of transparency, and it came at a pivotal moment for financial markets and the economy. Mr. Powell said he was listening repeatedly. Markets are expressing concerns about global growth and a trade war. Mr. Powell said, "I'll just say that we're listening carefully." The chairman deliberately repeated that the Fed is listening to the markets several times, and then, seemingly doubling down on total transparency, the Fed chair said he would be taking the market's downside risks into account in making policy decisions moving forward. The nation's most powerful financial officer could not have made clearer that the Fed was making an important shift in monetary policy, and he did it live on the web before an audience of several thousand viewers, as well as the people in the room. It was a poignant moment in financial history because it showed the transparency of the Fed, a uniquely American strength. This was a moment that is likely to be remembered in financial history. Asked about criticism of his decision to hike rates by the president, the Fed chair displayed the independence of the Fed. Flanked by his predecessors and live-streamed on the web, the Fed Reserve chair had asserted the independence of the nation's central bank. It happened January 4th, 2019, live on the web, a uniquely American act of transparency that is likely to be recalled in financial history.